as promised, let's get back to that conversation on the FMCG and consumer space. We have Abneesh Roy joining in, Executive Director at Nuvama Institutional Equities. Abneesh, thanks so much for being with us. Everyone's looking out for these FMCG and other consumer/retailing companies, hoping that there'll be that burst of growth where finally the market attention can get back, especially on staples. What are you working with? Let's get your sort of broad brush expectations, consumer expectations for Q1.
Sure. Thanks and good morning to everyone. So yes, we are seeing the macro improving. If you see, most of the parameters which are needed for a consumption boost are coming into place. Yesterday, there was a talk about GST rejig also, and they're talking about 40 to 50,000 crore kind of a consumption boost. This is over and above the 1 lakh crore tax rebate which happened in the union budget. Monsoon is good, palm oil in control, crude oil in control. So a lot of the macro, we are seeing improvement. In Q1, you will see still a slight lag in terms of recovery in consumption is there. Our sense is from Q2, you will see the initial signs. Some companies are already seeing some level of improvement. For example, in Hindustan Unilever, which I think is the barometer of the sector, we expect 3% plus kind of volume growth in Q1 versus 2% previously. Avenue Supermart update was decent with a 16% sales growth. They are adding now UP as a new market. That's obviously India's largest population. For next 3-5 years, I expect Avenue Supermart store addition to be strong. In this quarter, you will see the summer category being quite weak. So Varun Beverages, Imami will be weak number. We are also slightly underweight on Maharashtra liquor spirits market because of this new development. So you will see that overall starting Q2, United Spirits numbers will be weak. Even in Q1, slightly weakish numbers from United Spirits. So in the alcohol, we'll have a clear preference for United Breweries as the stock. They will see beer consumption go up in Maharashtra. In the core staples in Q1, we expect good numbers from Britannia, almost high single-digit sales growth and margin expansion because palm oil has corrected. We also like Bikaji. We like Nestle. Yesterday, they have opened more expansion for the Maggi, which shows the coming back.
Okay, very quickly, since of course you've mentioned lots of companies, if I were to once again ask you, top 2 or top 3 companies that are likely to showcase the highest volume growth in this quarter, which ones would they be? Top volume growth drivers?
Yeah, absolutely. So Marico update will come anytime. We expect 7% volume growth for the India business. Bikaji will be 8% volume growth. These two, if I have to highlight, Bazaar also quite positive. We expect almost 6-7% volume growth. In our view, paint stocks bottoming out is there. Gradual recovery will start. Consolidation has happened. Axo has gone away and now JSW is there. So we are positive on the paint sector from a longer term. But Bazaar and Indigo, there is a revival in Q1 itself.
All right. Hi, Abneesh. Thanks a lot for joining in. You briefly mentioned HUL, the 3% growth, I think is what you mentioned. A lot of investors say this, that everyone says buy high pedigree names, good quality, good products, etc. So some of them would have bought HUL 5 years ago. To their bad luck, the Nifty is compounding at more than mid-teens in the last 5 years, but their stock price is the same. Do you think the time has come now for HUL to perform? Because we have seen this in the past. I think in that period from 2008 to 2018, it didn't do much. And then the stock went up 3 times or more than that. Do you think the time has come now that HUL deserves to be a buy?
I think very good question. In many large caps, we did see in other sectors, 4-5 years, nothing happened and suddenly stocks have gone up. I think in case of FMCG, HUL will be still slightly lower in pecking order. Yes, stocks should revive because ultimately for any FMCG, volume growth is very important, and Marico stock, if you see 7% kind of volume growth, has really supported the stock. So yeah, I like Hindustan Unilever. My preference in terms of pecking order, we like Britannia more, we like Nestle more, because food categories will grow faster. In case of HUL, the issue of Horlicks continues to remain as a challenge in terms of growth. And in terms of D2C competition, Minimalist is a good acquisition. Near term, the issue for HUL will be the lower margins which they are already guided. I think Q2, there is a surprise positively possible because palm oil, there is a correction. And coffee costs have also come down by 30% in the last 1 month. But in terms of preference, HUL will be lower in the pecking order. But yeah, I think from the next 6 to 12 months, it could give a 10 to 15% return.
Got that. Just to get back to the point about GST and the likely relief for middle and lower income. So they would target items like toothpaste, tooth powder, umbrella, sewing machine, pressure cookers, kitchen utensils, bicycles, etc. So do you want to tell us 2-3 stocks which would, directly benefit if this were to come through? We should keep on our radar.
I think in the listed FMCG space, not much. Toothpaste is at 18% rate, so it's not at 12%. At 12%, we have very limited niche products in FMCG. So I don't think the listed space any direct play is there. So we are talking about ghee, we are talking about, say, drinking coconut water, etc. Those are very small segment. The real boost will be in terms of customers saving on those because he will pay lesser. And there can be 40,000 crore kind of stimulus program, but very early days. We need a consensus in the GST. But again, if you see, this is in sync with what government has done. They have reduced the import duty on edible oil a few weeks back. They have given 1 lakh crore kind of stimulus in terms of tax rebate. So clearly, government is looking for a lower inflation and more stimulus because urban demand continues to remain quite challenging in terms of the lower end. So I think they will address.
So Abneesh, what you're saying is, and I know, we don't want to speculate and guess too much on this right now. It's within the realm of the policy. But you're saying that from the listed FMCG universe, you're not expecting the slab changes or the rate rationalization to be too material for listed FMCG companies. Is it right?
That's one scenario. For example, if 12% moves to 5%, no big direct benefit, small here and there can happen. As I mentioned, ghee and some of the other segments are at 12%. Tooth powder is at 12%. So but that's very small part of the listed oral care companies. Toothpaste is the big segment, which is at 18%. So yes, the other scenarios could be they do a complete rejig, right? If they do, for example, instead of a 5%, 18%, 26%, they have a different rate, then we'll have to see. But as of now, the more likelihood is that 12% merges into...
Moves to 5%.
Got that. Thank you. Thank you very much, Abneesh, for your, providing that clarity. 9:10, Sudarshan is back with us. What would your